John, 70 million plus single stock options expiring today. I got to imagine that is part of the reason for the market volatility lately, or no?
Yeah, I think you're exactly right, Brian. And the part that you mentioned about the gamma trade, gamma is, of course, the rate of change of delta. And one of the reasons that you have that is I think you had a lot of A, complacency, B, a lot of people who had sold options, which means they take on an obligation to do things, in some cases to buy stock if they were selling puts. So the fact that they'd been making money as the market just kept climbing up, 0.5% a day for the last 2 or 3 months, it seemed, that was a pretty regular pattern. And then we'd slip back, and then they'd sell more of those puts, and it would just go right back. And those puts were all finishing out of the money. Well, this time around, it doesn't seem like they will. So to your point, there's an awful lot of folks that are probably nervous about being put a lot of stock at higher prices because that's the obligation they took on. But one thing, I guess, if you wanted to say, hang your hat on something, Brian, volatility didn't jump nearly as much as it did with the first cases of Omicron being reported just after Thanksgiving. I mean, volatility was up yesterday, but it only made it up to 22.5, and it pulled back from there and finished at 21 and change. So this is not at all like what we saw before. That was because we didn't know what Omicron was. This time it seems like, some people got caught doing something they shouldn't do. Same thing they do with cryptos, Brian. When you have too many people leaning one way, then they kind of give it a little bit of a push.
Yeah, I think you're right, John. Honestly, looking at doing this for as long as I have, I don't think COVID honestly has anything to do with what's happening with the equity markets right now, because you're seeing this divergence. I mean, Dow futures, they are higher. To your point, this negative gamma idea is if you're short a call option and the markets are going up like they were. We got to remember, last week was the best week for the S&P 500 since February. So we're coming into strength. People who were short the market got sort of called out without their clothes on in certain ways, and so that rate of decline goes down. But on a more macro level, John, do you feel like maybe we are in some sort of a rotation? Listen, we've talked about this. You've talked about it for years. Out tech, in big boring companies. It's never worked out long term. At some point, you wonder, will it actually matter longer term? I don't know.
Yeah, and that'll depend on, whether it's bond vigilantes or the Fed that gets the interest rates moving higher. Because right now it's just that taper. It's not pushing interest rates really in a marketable or in a big way, Brian. But certainly there are some nervous folks there. And I was in New York yesterday. The lines for those testing sites, I was just walking by them. Some of them told me it was 3 and 4 hours at those testing sites. And I haven't seen anything like that in any other city that I travel to, only New York. And I guess New York's unique for a lot of things. They'd rather not be unique for that.
Yeah, we saw it a little bit in Miami as well. I think maybe hopefully people just testing ahead of the holidays, meeting with loved ones. We're going to find out how it plays out. John, to your point, though, the VIX is not at 40. I mean, if the market was truly spooked and we would see the VIX spiking. You mentioned the VIX is up a couple of ticks, but the VIX, at least to me, and tell us what you see, is not indicating some giant irrational fear right now. It's at 21.5. It's elevated a bit, but not even close to where it was a few weeks ago.
Yeah, that's exactly right. And the market, usually you do see those spikes, and then it takes a while to work our way down. In fact, it took that rally you mentioned last week to take it back down below 20 after that jump that saw it spike all the way up to 36 or so. So to see it go from 18.5, where it was a little over a day ago, to 21, 9%, 10% moves. Yeah, those are big moves, but it's coming off of a low base again. This isn't showing us the sort of fear that we'd expect if indeed they were going to keep hitting or hammering on these stocks, whether you use the VXN for the NASDAQ 100 or the VIX for the spot VIX of the S&P 500.
Yeah, what are you expecting, John? We're heading into the new year here. Obviously, volume tends to go down, but volatility thus could spike if people, take off, whatever they may do. What are you expecting after this big quadruple witching today? What do you think happens heading into year end?
I think some of the tax loss selling will accelerate a little bit, Brian. They no longer need that T+3. They can do it right up until the end of the year. So some of the names that are being sold off here, I'm sure, are people that were waiting, hoping they wouldn't have to take that hit in Snowflake or take that hit in CrowdStrike or whatever it might be, those high multiple stocks that you're talking about. And instead, they're sitting there, well, I guess I better take it now because if I want to book that loss, I can't buy it back for 30 days, wash sale rule. So I have to exit before the end of the year, and then I can't buy back in January. That probably makes a lot of those stocks pretty attractive in January.